All right, ladies and gentlemen, I hope you had a wonderful day. I got another watch list for you. And the stock market just gave up like 5 days of the last generation or the generational rally, but pretty much we are now below CPI all in one day. You have literally given back all of the last 5 days of squeezing. The short squeeze finally came to the end. Maybe that indicator that we brought up there with the VIX. I don't know. You guys remember this one? Well, yeah, it looks like we kind of had some downside coming into earnings, but there was a ton of different things that happened today, one of which is the confirmed news that Jerome Powell actually tested positive for COVID, but I have a bunch of stuff to show you, so I'm going to dive a little deeper into it, but this is the PPI, the month over month, and it is actually one of the biggest since COVID. The retail sales came down today, and it was bad, and in a very weird way, you actually saw bad data have a bad reaction. Some of you are cheering right now. You're like, yes, finally. So that was part of it. We're going to dive a little deeper into that. But then also, after Japan yesterday, they kind of surprised, but ultimately it ended up benefiting our bonds. And after more, I guess, harder landing type data that we received today, the bond market and the peak federal funds rate, it is now lower than any other point this year. That game of chicken just got a lot worse. No matter how many Fed speakers you hear from, no matter if they all say the same thing, even if they say a quarter basis point at the next meeting, the bond market is still strongly disagreeing. So this one was big. And then finally, the cherry on top, even after this drop and how everything is, you know, those financial conditions Powell keeps talking about? Well, yeah, they're actually still higher than the first rate cut in March. So there you go. So we have a lot to talk about. You got earnings tomorrow morning and then after hours with Netflix. We're going to talk a little bit about it, but what happened today and how this is setting us up, I mean, I would even argue today is the first day of the year because now bonds and stocks are matched up. You got a little bit of the rally out the way. You're like 1 week away from the big earnings, even bigger than what we're already getting. And then on top of it, you're also approaching almost 1 month since a lot of people started doing the tax losses. So, Chad, we got a lot to cover. I got the plays for you. I made a couple today. Took a little bit of profits. The bonds really came back for us in a big way. We're going to go over that. And then I got 3 stocks for tomorrow. So, Chad, we better see you there live in the morning for the earnings, and we will be there after hours. So run it, baby.
Working to the couch, it's the 2020 election. Live in the hills, but I still get a spread. Started with a little, but I still reinvest it. Feel how I feel, then you feel like a blessing. I just want the lesson, I just want protection. I'm up and I'm down, but they sound like progression. Farmer never plans if he waits for perfection. Finger to the down.
But right off the bat, ladies and gentlemen, before we get into the keys, if you've liked anything so far, and I promise you in the next 4 minutes, I'll give you something worth it. Oh, I don't know. But like the video, drop that like and make sure you're subscribed. We post this recap every night, besides the fact that we're streaming. But Chad, a lot of things happened today. So I would chalk it up to recessionary data. We were discussing it. It started off in the morning. The PPI was good because it was bad, but then the retail sales, that was another really recessionary type data. And the fact that a lot of these indexes are now finally plummeting, and they're plummeting more than what we saw in 2020. So even though people want to see, soft landing and they want to see the inflation come down, it's starting to look a little bit more as the hard landing, or at the very least, if this trend continues, that will not be good. But really, as everybody started to digest it, the context of everything, it was really starting to look that this data is coming down. It's not as pretty, and then you just had so many different events. So you had the PPI in the morning. You even had more manufacturing data. The real estate data came out, and it wasn't the worst, or it wasn't worse than last month, but it was still pretty low. And then Bullard came on and said something about 50 basis points. And then right here, that's our second key. That's when Powell, they announced that Powell had COVID, but I think it was just the confluence of everything, and that's why the bond yields started to go down. TLT, IEF, they started going up. Part in part was because of Japan, but then it kept running, so that was a big thing. But like I said here, Bullard mentioned 50 basis points at the next meeting. That would have been bearish, but we actually hit a high right after. But then right when Powell said he caught COVID, things dropped. And even after hours here, we got to hear from Fed Logan. She is a voter, and she was saying how officials should not lock in a peak rate and must assess data. And she did back slowing rate hikes. But this quote right here, that's pretty unique, because she's saying, well, maybe we shouldn't lock in the Fed funds rate, or we shouldn't lock in a peak because maybe we don't know what's going to happen. That was kind of the only Fed member who has pivoted away from saying, no, we're going to hit 5. We're going to hit 5. But all in all, it was all of these things at once, and then it hit. But I got to show you this one. You are pretty much now at, or you rejected the downtrend of the year. So I don't have it drawn out here in a pretty picture, but like if you took like a straight line going down here, man, it's like right around, I believe here, if you took it from right around those levels, I think we need to go back a little higher than 1 year. Yeah, if you took the straight line from here on down, just drew like a straight diagonal line down, we have pretty much rejected that point cleanly about 5 or 6 times, and that's part of what happened today. You drop below the 200-day moving average, you drop below the Fibonacci, bro. So even whether you were technical or not, it's just like today kind of broke down in a very wild way, and that generational rally you saw, it definitely lost a lot of steam. So the rest of the week should be simple, but I really think it's going to be decided now by the rest of earnings, or if we get any more data, that could be bad. And tomorrow morning, 1 hour before the bell, you will be getting the jobless claim. So we ignored it last time on CPI, but now we're lower than the CPI point. So that could have an effect, especially with people getting a little bit more worried here. But bad jobs data would be more beneficial than not. Otherwise, it might just be a little bit confusing, and now some people are starting to react to that recessionary data. But other than any of that, you're going to have Procter & Gamble earnings in the morning, and this is going to guide the Dow Jones, which has been selling off, and even in general now, the next set of earnings next week before Apple, Amazon, Meta, a lot of them are Dow-related, defensive, and all of that. So I think this will give us some of the sentiment throughout the morning, and then Netflix, I think that's going to decide the rest of the week. Netflix after hours, it'll let us know on Friday, and are we really going to give back the last 5 days or not? And then just keep in mind, you have Microsoft and Tesla next week. So those are the main keys. Before we get into the plays, the last thing I want to add on here, the Dow was an underperformer, and it's about to get interesting here because the Dow sold off big. You got a lot of Dow earnings tomorrow and then coming in through the next week, but the difference was value got sold off, stocks went down, but now the bonds are still coming up. So keep this in mind, because if we keep seeing that happen, borderline, it's hard to judge it yet, but even the bonds are playing that recessionary card. So we will see what happens. But let us get into the plays. So right off the bat, I got to start with it, man. We got a couple of plays, but Netflix, they have earnings, and the premiums are already high. A lot of people were saying this in the chat. They said, I played both ways, and my calls and puts are both up. So listen, I'm in the shares. I'm going to be flipping this all day tomorrow, most likely on a small amount of shares. I got a pretty crazy idea, so you better be there too if you got a small account. We're going to play with this one a little bit, but if you are trading the options, I think the premiums are going to be killer on both sides unless there's a really big break. So assuming on whatever happens with the jobless claims, if it's like a big 2-3% move in one direction, the other side of the contracts will get killed. But if you get a little bit of stability and up and down throughout the day, just watch for the premiums to juice, and this might be helpful if you want to make a flip. So coming into the earnings, Netflix is pricing in about 10%, and believe it or not, on average, they've actually moved 11% over the last like 4 or 5 years. So Netflix is a big mover. They're at like 330-ish right now. That'll be either like 300 tomorrow, maybe lower, or even 360, maybe 370, where they were at some other time. And I think year over year, Netflix is actually still down about 36%, while the S&P is down about 19. So we're going to see. They got pretty low guidance. Their fourth quarter, they usually spend a lot more money, and their margins are lower, but really, I think it's going to be all about guidance. So I'm going to flip the shares, still holding it for the long term, and we will be covering this one after hours tomorrow. So hopefully we see you there. But that is play number 1. Then play number 2. Oh, wow. We had a good day on this, but I hope you feel me on this. And I drew something out to show you, but IEF and TBT, these are bond-related plays, 10-year, and then I think TBT is the volatility index for the 20-year plus. If you do not know, I am playing /ZN, which is a 10-year future on the bond. So here's the deal. The bonds have moved a ton as of now. Japan helped out. Again, some of the bad data has been helping out, and even the Fed futures and where things are going, but it could be a good time to take profits on the bonds at this level. The rally may fizzle out. A lot of people were talking about that this morning, and then you had a historic 20-year bond auction. All of the bond auctions have had a lot of demand, and then, again, what happened with Japan yesterday, the fact they didn't change much, it's kind of eliminating that idea of Japan investors repatriating funds, a.k.a. bullish for the bonds, but the bonds are either going to slow down. They've had a massive rally already over the last couple of months. They will slow down here, or they are really about to squeeze, especially if earnings and data gets bad and then people in the Fed start changing their mind really, really quick. So watch out for all of that, and just watch out for the Fed speakers as we move forward throughout the next week or so. These Fed speakers, they have the ability to move the bond market. That's literally what they mean when they say they want to talk things up or down, really. It's not stocks. It usually hits the bonds first, and then any of the good or bad earnings, depending on how good or how bad, that can also have an effect. But what I want to show you here, it's pretty simple. And if you've been watching for enough time, I hope this plays. I hope this hits for you. But this is where we're at now. Again, we got in a little bit around here. We're only up a little bit, but we made like $4,000. Like I was telling you all throughout the week, I said the bonds need to pick up. They're really, really lagging behind. And a day like today shows what I was talking about. But this is the next level. I didn't have this drawn out till today. You didn't see this on stream. But right here, this is around 3.25 on the 10-year. And why should that be familiar? Do you guys remember when we first started getting to 3.25 last year? I called this out a couple of times for you, and I said, this is the breaking point. You went above it a little bit, then it failed, and then it came back down. But then right at the August, September, right when you got about 3.25, that is where things went crazy. This is a very big point historically. You'll see what I'm talking about, like 3.25. That was the peak in 2018. Let's go back a little bit more, and you'll see this is even from like 2010. This is where things started to really drop, and it was right around one of the lows. So this is a multi-year level for the bonds, and this means a lot. So especially as we move forward right now, if we're going to go to that level, there's going to be conviction. It can't always run past it and come back down. We've seen that a couple of times. So just keep this in mind, but I believe the level should be around here, give or take. The futures are a little different, so I'm just kind of eyeballing it, but I would watch here. But that is also another point I'd be willing to take profits. So I'm going to hold it, but listen, you can't say I didn't tell you about it. If anything, we told you about this line. We told you about it a couple of times, but like I'm saying here, if you got good gains, I don't know where your account is at, but be wise with it. Otherwise, you could squeeze out a couple more percentage on the futures, this is still, like, I believe, another like 10, 15 grand. But if you got in even late or even at a higher price, I'm in at a higher price, I'm still up 4 or 5 grand. If you average down on any of these, you probably already made your 10 or 20 grand on that one. So keep that one in mind. Keep on the lookout for that. But bonds, I'm telling you, it was absolutely wild. And depending on how things play out from here, it should get a little more interesting. But that is play number 2. And then finally, Alcoa and XLB. XLB, that is the materials ETF, but Alcoa earnings after hours, man, it did not help this whole idea of recessionary data. Literally, they did pretty bad, and they warned on some stuff and even inflation coming down. And I'm not the only one saying this. Right after the earnings, a lot of people were echoing this comment. So be on the lookout tomorrow. I want to see how this continues. And really, materials, they're still holding some pretty nice gains. So if some of these go down, materials, commodities, these could be good, especially if we get a decent downtrend. We talked about it here today. You'll notice, like I said, the bonds went up today. There's their ZN, but the Dow dropped pretty big, and maybe this is that moment where the Dow gives up. I wish we shorted it earlier, but materials and commodities, they've kind of moved with the Dow. So I think there's more meat on the bone with materials, but just be on the lookout, because if we get any sort of downtrend and the bonds keep getting bid up, you might see some of those names that had value and held up. They may start to give back, but it's going to require earnings data and ultimately Mr. Jerome Powell. But those are the main plays. As far as everything else, Chad, we'll go over what I did today. I grabbed Procter & Gamble in the morning, 50 shares at $149.65. It dropped $1.30. I averaged down with another 50. I'm still holding it. I think I'm down like 260 on that right now. So that one wasn't good. There's Ethereum. He's hiding there, 16. We made some money back. But I got into that one, and I ended up holding it. So good part, we get the dividend by holding it into tomorrow. Bad part, they report in the morning, and I'm either going to lose another like $400 or $500, or we'll go up and maybe break even, or good earnings will get us to break even. But I'm hoping that the weaker dollar, benefits them a lot more, and this might be the first test here for any of those Dow companies. So we'll see what happens with that. Then Goldman, it started to bounce a little bit, only 39 minutes after the bell. I got I think $30 there, so just under $1 per share. It was up almost $1 and change, but sold it a little late there. I didn't really trust the rally early on, and I was like, well, Goldman's moving a lot, and some things are just going all over the place, but closed out of that one with a profit. We were down on that yesterday. Then Activision had an old short from last year. I was down on it, I think $200 at one point, and then I was only down $5, and it bounced up. I was able to close it with a $15, $20 loss, so I said, I'll just get out of it. It was moving really, really weird on the day, and I'm kind of done playing that. And then I closed my Netflix, if you remember. That was the small share play. I made $15. Not too bad on 5 shares. It took a couple of days, but hey, not so bad. And then I instantly flipped it within 45 seconds to the long side, I guess 10 cents higher. But the idea here, pre-earnings run up, and I like the range that it was in, and on 5 shares, it can't do much. But this is what I plan to do tomorrow. I want to just go back and forth, because by doing this today on a small amount, again, no commissions, you might be able to stack up a little bit, especially if you get some crazy pre-earnings moves. But those were the only other plays as far as what I am holding now. I don't know if these are updated. For the most part, they are. There's the yen. It didn't really change after yesterday, which is mind-blowing. The ES, I'm back down $4,500. I was down $400 on it this morning. If I took it, that would have been great execution. But as you see, I'm no longer down as much, but it's still a big amount on the NQ. We're letting them balance out, like I said, but you'll notice these guys are holding up, my yen and bonds, and now this one, I'm expecting it to do some damage here, and then hopefully as we play through our earnings and Powell, we'll be able to do much, but it looks really scary. But for the most part, everything's kind of just been moving a little bit. 2 steps forward, 1 step back, then 2 steps back. So we're going to see how to play it, but I'm using all of these to kind of balance out. If I'm going to lose on 2 of them, I'll win on 1, and then vice versa. But we will see. Goldman, we cut out of that one. And then here's the Procter & Gamble down 270. So we'll see by the morning. That Meta short came back a little bit. And then what else? The YCL. Is that showing up again? We're still up on that, but we lost some gains. And then Uber, I was going to sell out for $200 today, but I thought I'd hold it, and now I'm back to negative on it. And then the UAL from yesterday, that one also got clapped. I'm down $230, and then I lost $70 on the American, but we'll try to ride those out there and see. But again, how today played out in some of that data, it really just kind of knocked out any good data that we were hoping for. Yeah, things are looking good. So we will see what happens. But Chad, it's all about the bonds. It's all about the earnings. And we're going to have a good one. And that is your watch list, ladies and gentlemen. Make sure hydrate, healthy, ready to go. Make sure post your watch list. Make sure we see you there in the morning. I need the armor on. I need the helmet shining. I need you to remember, no complaining, no celebrating. Everybody gets a chance. What did you do with your chance? Did you focus on yourself and how you could beat yourself? Or did you use that opportunity to talk? Did you use that opportunity to feed the ego? That's not what it's about. We still got a whole nother year of this, and you're already seeing how things can quickly change and move, and I know you're prepared. Don't get lost in the sauce. Don't get lost in the emotions, and focus on what you need to, and don't underestimate the power of earnings, shares, and the macro, baby. But Chad, I love you. Thank you guys again. As always, you drink that water. I will see you in the morning, and get ready. We got some more data, baby. But that's it. I think I'm done. Yeah, hard.